What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Today is January 23rd, 2023. And on Bitcoin and Markets, you get a natural and honest analysis of Bitcoin and macro. So today is Monday, and this is when I do my newsletter. So I'm writing that. I'm changing the format a little bit this week due to some feedback that I got when I was down in Naples. I went to the Bitcoin Day event down in Naples, and it was awesome. Once again, Edward, the person who puts on the Bitcoin Days, he hit it out of the park. It's becoming really, I think, probably pretty easy for him to set up this package of, moving around to cities and getting the speakers set up, getting their accommodations all set for them, and getting the food because, he has lunch there on the day provided. And yeah, it's just a really good event. I spoke about kind of the dangers of the inflation narrative versus a deflation narrative for Bitcoin and described that deflation narrative. So I think normally when I do that kind of talk, people aren't ready for it, especially in Bitcoin, people that come to like these Bitcoin things, because most people find Bitcoin through a inflationary narrative. I did. That's how I found it. That's how I got into gold. Through the idea that the Federal Reserve or central banks are destroying money, they're printing money, and we need to go back to a sound money and all of that stuff. I mean, that is the inflation narrative, but it is also a progressive narrative, and it's a like a conscious planning narrative because knowing that something is better and then working to make the economy or society move in that direction, that is a central planning narrative. And the way I kind of look at it nowadays is this is natural. Everything is kind of happening naturally. We went to a credit based system naturally, or first we were on gold or silver as a natural consequence of the way the world was back then. And then after World War II, the world was a different and unique place. And so we naturally went towards a credit based money that was much more elastic. Now the world is sliding back into deglobalization and into a time where sound money is going to be much more relevant and what the market is going to choose. So all of these things are a natural progression of going from hard money to credit money back to hard money. So that's how I kind of look at it, and that blows a lot of people's minds. But anyways, yeah. So Monday is a newsletter. If you guys aren't subscribed, go to bitcoinandmarkets.com and sign up for the free tier over there. I am live streaming right now to YouTube on the BTC Market Update channel. That's a new channel. And also on Twitter, at Ansel Lindner is the handle, so you guys can follow me there. And of course on Telegram. That's my home base. My guy's holding it down over on Telegram. So, yeah, and then on a podcast after. So I put these out. I still have to do Fridays, but I'll put these out on a podcast version a day or two later, and they all always have an associated post on the website, bitcoinandmarkets.com. You can find that by whatever episode number it is, just putting a /E and then the episode. So this one is 304. So it'll be bitcoinandmarkets.com /E304. And you'll see all the charts I talk about or all the links. I'll make sure to put all the links in there for you guys, stuff like that. All right. So I covered the newsletter, covered Naples. What are we going to talk about today? Well, we are going to discuss like the general market feeling out there is one of disbelief, in my opinion. Disbelief in the stock market rising, disbelief in Bitcoin rising. There's just a lot of, I wouldn't even call it confusion. I would just be like, people think a hardcore recession is coming and they don't know how to make sense of a rising stock market or a rising Bitcoin. How is this possible? So that's what I think is the general feeling out there in the market, and it's going to go on for quite a while because I don't think I still remain in the same place I was for the last 6 to 12 months, saying that there isn't going to be a really bad recession. I think we might have a mild recession. That is the most likely outcome, in my opinion, is a mild recession. But there's a 25% chance we don't have a recession, and a 25% chance that we have a hard recession. So that's still kind of the probabilities that I'm working with. Now, what is this? How do I get there? I get there because CPI coming down so quickly is going to fool the market a lot. So we will continue to have positive real GDP because inflation is coming down so rapidly. And that actually, I was listening to Joe Carlisari on is it Inside Bitcoins that he does? Anyways, on Inside Bitcoins, and he was saying that the guy who first wrote the academic paper on yield curve inversions and how they come before a recession, right before a recession. The first guy to make that connection and write an academic paper on it, he came out and said, "Oh man, I think the yield curves are being fooled by CPI." He called it inflation, I think, but they're being fooled by CPI. And that is exactly what I have been saying. So I think that's fairly interesting. Okay, let's get into the charts here a little bit. I have been posting on Telegram this morning, so there's not going to be really anything new to the charts that I posted on Telegram. The Bitcoin price sitting at 23,078 right now, pushing up a little bit. Let me go to the hourly and see what we got. Nothing incredible right now. I'm of the opinion that we are going to have a slight correction, at least pause. We haven't, I mean, RSI is incredibly oversold on the daily. Let me bring that up. So RSI, you can see, hit 89.26 and now is in a bearish divergence. So that tells me, this is about as high as it's going to go because you can't get much higher than 89. I mean, of course, it's possible. Like, let's say we do break up and go to 30,000 in the next couple days. We would break 89, and then that bear div would not be confirmed. But short of something like that, which I don't think is going to happen, we're going to have a correction. And where will that correction be? So let's bring up some of these moving averages and things. You guys on Telegram probably saw this morning, but I will post it again. This is just with the 200 and the 50, and you can see that they're about to cross into a golden cross. I expect something akin to this because we are needing a correction. So all the way down to 20,000 is very, very likely, I think, on coin. That will bring out all the bull trap people. They're saying, "Oh, this is just a bull trap. This is just a bull trap," and they will bite off on it again. We'll get shorts to load back up. Provide the fuel for the next leg, and wherever that next leg will take us. And most likely, I think the next leg is going to take us to 30,000. That's the next big milestone for the Bitcoin price. So how soon we get there is the question. It could be by mid-February. But anyway, that's what I'm looking at on that chart, on the Bitcoin chart right now. Let's go into the S&P 500. Again, disbelief in this chart here. Everybody, nobody can believe this. Let me take these moving averages off. All right, so this is the weekly chart, and you can see we're breaking up out of this downward trend. And nobody can really make sense of this. I think that most of especially the second half of 2022 was psychologically held down by the hawkish Fed. So the Fed raising rates doesn't do anything mechanically, and I've said that multiple times throughout the last year. These Fed rate hikes don't mechanically do anything out there, but they do have a psychological effect on the market. And so I think the stock prices have been held down psychologically. And you can see that if I just put a box around the second half of the year, so July of 2022 started about here, we're higher than that, but you can see that this general box area is, yeah, we made a new low, but it has been generally sideways. So even in the second half of the year, when the Fed rate hikes were really picking up, 75, 75, 75, stock market held up just fine. It went sideways for the most part. And now that the Fed is going to pivot, they have pivoted. They started their pivot in November. They added the word cumulative to their press release. Then in December, they went from 75 down to 50. And now it's pretty much guaranteed that they're going to do a 25 basis point hike here in the next week, at the next meeting next week. So, yeah, that is a pivot. They are changing direction. People, I don't know where the idea came from that a pivot has to be from hiking to cutting. I mean, that would be a 180-degree pivot. But what about a 20-degree pivot or a 15-degree pivot? So this is a slow motion pivot for the Fed, and stock markets are ready to rally, guys. The stock market is forward looking. It's ready to rally, and so is Bitcoin. It has been, both of them have been psychologically pinned by this Fed hawkishness. And once that hawkishness goes away, it's full speed ahead, I think, for both of these things. Okay, let's take a look at the daily. And yeah, it's just looking very strong. Let's see, today it's up 1.5%. Yesterday it was, or not yesterday, but Friday, it was up 1.9%. So 2 very strong days in a row here for stocks, and we'll see how this goes. I was listening to Tone Vase this morning, and he was saying, he was the only person calling him, or he was the only person bullish on stocks for like the last 6 months. I'm like, what? I've been a bull on stocks this whole time as well, and a bull on Bitcoin. And if you do take out those big crashes due to FTX and Celsius and everything, I mean, we would be quite far ahead of, we'd be about all-time highs, I think. I could do that real quick. Let's see if I have those still up. Go to the weekly chart. And this will be fun. We'll see. I'm pretty sure I still have these saved on here. Yeah. There we go. So this is if you take out all those crashes. Oh, man. And it doesn't show this most recent thing. So let's grab that if I can really quick. So let's see, that stopped about there. So we'll grab this and we'll just move it right up here. And I'll post that now to Telegram so you guys can see that. And this is just taking out all of the big crashes because, none of those crashes were due to, a Bitcoin fundamental in any way. Terra Luna, no. What were some other ones? Three Arrows Capital, Celsius. These were all leveraged DeFi things. And yeah, they held a lot of Bitcoin. Celsius, I think, held a lot of Bitcoin. Or no, it was Terra Luna that held a lot of Bitcoin that dumped it. So yeah, I guess you could say that was a fundamental. But overall, this was not a fundamental of Bitcoin. This was a market-driven thing, mainly driven off of the scams. So all this chart is right here is I took out all those big down days or down weeks on this chart, and plopped them, up here where they would be. And you can see right now, it would be at 60K. I mean, pretty close to an all-time high if you take out all those big down days. So that's what I think. That's what the market is acting like almost. Even though the price is way far down, it's acting like, hey, we're ready to break out. We're ready to get this game back on, make some new all-time highs, et cetera, et cetera. So it can really go fast. I am calling for slight correction, a 1 week roughly a 1 week correction, maybe a 2 week correction, but not below 19,000. So once we get some more shorts to squeeze on the way up, then the price can go back up and really rally hard. So that is what I'm expecting for the Bitcoin price. Okay, so we looked at stocks. Let's take a look at the dollar. It's holding. So the second black line, this first one is labeled 2016 high. Then the next one below that is the COVID high. So we are sitting at the most recent, right on top of that most recent previous high. Let me zoom out here. You can see that roughly. Okay. That's where I put it. I think that was a close or something. Maybe it was a weekly close over here. Let's see. I tried to be. Yeah, it was the weekly close. This black line is at the weekly COVID high close. And that's right where we're sitting right now. I'll post that one as well to Telegram. I'm not expecting a big sell-off in the dollar. I'm not a dollar bull per se right now. I think we are going to enter a range. So I'm kind of neutral on the dollar, to be honest with you. It is going to, I think it's close to the bottom of the range, and I expect it to go higher. But that doesn't mean I'm necessarily expecting it to go much higher. Like when it was sitting at 114, a lot of people are like, oh, the dollar wrecking ball, this is going to keep going and it's going to go to 150 and all the emerging markets are going to get destroyed and all this stuff. And I'm like, well, guys, you are about 2 years too late on this call. And right now we're going to actually consolidate and enter a new range. And that's still what I expect right now. So people kind of jump on the bandwagon. People are really jumping on a falling dollar right now. And they're going to be wrong again. Okay. One thing I do look at quite a bit is the Hong Kong dollar, because, my belief is that when it's at the bottom of the peg, that's a weak dollar time. And when it's at the top of the peg or moving towards the top, that is the dollar strengthening. This is kind of a proxy for the dollar in, Southeast Asia or even in East Asia. And as you can see, it is moving back towards the top of this range. So the dollar is strengthening. There is some dollar stress coming back to Hong Kong. And so this would make sense. If this goes to the top of this range, and so it goes up like this, that's going to correspond with the dollar DXY bouncing and going into a range. So that's what I'm looking at. And the Hong Kong dollar seems to go along with this. There's not many times that it really would make a move like this and not continue. I guess you could go back to 2016 here, and you can see this made a big move over here that didn't go all the way to the top, and then, went back down to the bottom. Maybe this is similar to this. I'm not sure, but I am watching this very, very closely on a weekly basis. Okay. That's it for the charts. Let's get into some of the other stories I had. So this one is the FedWatch tool on CME. And I say this every time. We named our podcast before they named their tool. But anyway, you can see that this is pricing a 98% likelihood of a 25 basis point hike. And then, so I guess Timorous, he is the Fed whisperer. He had I don't know if it was a tweet or an article, but apparently he said it's pretty much a lock that they're going to be going 25. I mean, we don't need him at this point because this right here tells me that the Fed is going to follow the market. Remember, the Fed is data dependent. They actually admit that, and they claim that as some sort of great advantage that they have. They're data dependent, and if the market is expecting 25 basis points, they're going to do it. They're going to do it. And the way that they kind of massage this is not the actual decision. The way they manage this is through the narratives building up throughout the month. The intermeeting period. They have all of these. Maybe they have speeches. Like Powell in Sweden or whatever. Jackson Hole is another example. They have all of these headlines. Maybe they get interviews, or all of these Fed governors are constantly doing speeches at all of these business schools and economic schools. And so those are opportunities for them to come out and say something to nudge the market. Those are monetary policy nudges. They're making sure that the economy, or not the economy, but I guess, market participants, the ones that are trading and the ones that are kind of setting the price here, that they know or they are affected by these different tweaks. And then, of course, the financial press goes out and does their part and makes the headline. Lael Brainerd says 25 basis points. Bullard says, let's get it over with and do a 75 basis point. So that is all monetary policy. It's all strictly choreographed. And very rarely do we get something that comes out that is not choreographed. So, and usually you can tell that. Okay, so that is that. We're going to get a 25 basis point hike. Okay, next story I wanted to get to was this one from Sputnik. Now, I understand Sputnik is a Russian news outlet, and so it's going to be very biased against Davos here. But I thought this was very interesting article and headline. So the headline here is, I think I shared this on Telegram. Did I? No, I didn't. Let me grab that. Okay. So the headline is Globalization Has Died and Davos 2023 was its funeral ceremony. Scholars sum up. All right, let's read some of this. The World Economic Forum's annual meeting place in Davos on January 16th through 20th, 2023. International observers sat down with Sputnik to formulate the main message of the gathering in a nutshell. Quote, the year's forum featured the new state of the world, divided, resentful, and grim. And this is from Gal Luft, director of the Washington-based Institute for Analysis of Global Security. Quote, Davos has become the dressing room of the West and is more divorced than ever from the rest. It no longer represents the real concerns of most of the world's populations. Its obsession with climate change, social justice, gender, and other forms of wokeness has made it a laughingstock and target of disdain for most of the world. The World Economic Forum, an international non-governmental and lobbying organization, was founded in January 1971 by German economist Klaus Schwab. I don't think he's an economist. I think he's just a businessman. I think he had some business before 1971. I don't think he's an economist. Anyway, initially the entity was called European Management Forum. It changed its name to the World Economic Forum in 1987. Bringing together business executives, thought leaders, and prominent politicians, the forum sought to become a global platform to spearhead the ideas of globalization and solve pressing economic and political dilemmas. However, some Western commentators observed that the forum quickly morphed into a technocratic, globalist elitist club which sought to dictate rules to the rest of the world. There is no return to the post-World War II system. In addition, we are seeing massive repudiation of some of the institutions and individuals who have been most associated with globalization: the media, Davos, entertainment industry, etc., etc. Deglobalization can also be seen along cultural fault lines. Western ideas, ethics, and values are rejected by billions who see them as dangerous and destabilizing, the U.S. scholar continued. And anyway, so that's all I'll read, but it is very, very interesting because it's similar to what the conclusion I came to over the last week of thinking about Davos and reading all the headlines and all of that, that it's just much less important. People really don't care about it anymore. You saw like they even had like live reporters there. They've done this for years, but it's almost like a PGA event or some sort of athletic event where they have these reporters sitting there and reporting on these elitists, like trying to make them more important, but nobody cares. The main thing is that the world is going against globalization. It's going against globalization. So you don't have a need for the World Economic Forum. Everything they talk about is cooperation. We need international cooperation this, international cooperation that. But it's not going to work because international cooperation is breaking down. And the main reason for that is because the economic environment has shifted. So in the old days, when you had 10, 20% growth in all of these countries, that was the carrot, and then you could give these countries a carrot to sign on to all of these large, basically socialist programs that in some sort of globalist utopian vision. They would do that because, we're growing at 10%, right? Can't shake a stick at 10% growth. But now you're growing at 1%, or you're growing at 0 or even negative, you don't really care about those international organizations anymore. So it's all about the end of this big debt cycle that we're in, and we're going towards deglobalization and the shrinking of credit in the world. And of course, that results in a move towards Bitcoin. And it's not going to be a conscious move. I mean, it'll end up being a conscious move, but it's almost like, I don't know, I feel like kind of believing in destiny in a way, but the world is moving in a direction, and it's moving in a direction that makes it balance. And so even though you might not want to, even though some political leader, some international institution doesn't want to march down this path towards the inevitable future, they will have to, because everything they do, just like everything the West is doing right now, is actually making it worse. They're chasing people away from these international rule-making bodies because, they can't save it. The harder they try, the faster it'll slip through their fingers. It's an inevitable march this way. Now, when it comes to Bitcoin, they're not going to sit down and be like, guys, my son-in-law told me that Bitcoin is a new thing. Let's look at that, and I think it's a good idea. Or, whatever. They're not going to consciously go that way, but they're going to try many different things. And the thing that's going to work the best is the ones that adopt Bitcoin, at least for import-export, at least for reserves, backing your currency, maybe not as a day-to-day currency, because I really do think that most countries will still have their own currency. It'll just be pegged to Bitcoin like it was pegged to the dollar. At least that's the first step that will take us several decades into the future. And then at that point, maybe people will start using Lightning Network, everybody will start using a Lightning Network or something like that. But the next step, the next main place that we're going to stop is using Bitcoin as a peg for a government currency. So anyway, those things will work the best. And slowly but surely, people will try things. You know, it'll be a trial and error sort of thing. And over the next 5-10 years, most people will have landed on backing their currency with Bitcoin. That's what I think is going to happen. 5 to 10 years is not a long time. It's going to happen faster than we think. Okay, that kind of brings me into the next story. And this is the last story for the day. And this is from Zero Hedge. The headline is Brazil, Argentina holding talks over possible common currency. And I guess it's via the Epic Times. But Epic Times has a paywall, so we'll read it here on Zero Hedge. I did share it with the guys over on Telegram. Before we get into this, guys, just an admin note, Ansel Lindner, Bitcoin and Markets. This is a live stream on YouTube and Twitter and Telegram. So check out the Telegram, t.me/Bitcoin and Markets. Check out the YouTube BTC Market Update. And follow me on Twitter at Ansel Lindner. Okay. So, like I was just talking about, people backing their currency with Bitcoin, but it will be a trial and error sort of thing. So this story fits exactly into that idea. So here we go. Brazil and Argentina plan to advance talks about a common currency for financial and commercial transactions in an effort to improve economic integration, leaders of the two nations said on January 21st. Brazilian President Lula, who was sworn in on January 1st, and Argentine President Alberto Fernandez details about their talks regarding a shared currency in a joint article published on the Argentine website Perfil. I don't know how to pronounce it. Quote, we intend to overcome the barriers to our exchanges, simplify and modernize the rules, and encourage the use of local currencies, the two leaders wrote. We also decided to advance discussions on a common South American currency that can be used for both financial and commercial flows, reducing costs, operations, and our external vulnerability, the article said. Argentina's economic minister Sergio Massa told the Financial Times that the two nations, South America's two largest economies, will announce this week that they are beginning preparatory work on the common currency. Okay, and it goes more into depth there. But what I want to say about this, obviously, this is a step in the direction of figuring out what currency is going to work. The old system has, the growth of the old system has stopped. It is stagnant and dying. And the only way that these countries are going to get out of it is by switching to a different currency. So they don't know it yet, but this is the first step in a process of trial and error that will eventually lead them to Bitcoin. So I thought it was very interesting. Okay, open it up now to guys on Telegram. If you guys have any questions, comments, concerns, this is the time to do it. Raise your hand, and I'll bring you up. All right, Curve, bringing you in. What's up, Curve? You got to unmute yourself. Yes, sir. What's up? Oh, yeah. Very interesting. Yeah, yeah, cool. Thanks. So to relay to those guys watching live on YouTube and on Twitter, uh, Curve just said that he agrees that globalism is dying, but that doesn't mean that we're out of the woods. And a cornered animal is very dangerous. So we need to be watching out for that. And also, he said he told me that Klaus Schwab was. Did you say engineer? Now I can't remember. Um, oh, Okay, so he was a manager of a manufacturing company. So yeah, not an economist, not an expert. I mean, these guys that have this like sicko, they're sycophants for experts, government experts, and international organization experts. They want Klaus Schwab to be a PhD in economics, but he's not. He's just an engineer, manager, technocrat, like Curve said. So, okay, any other comments from Telegram? Sven, bringing you in. Before Sven, before I have you talk here, just a note to the guys on YouTube and Twitter. I will relay what they say if there's a question or whatever, because the audio isn't being, relayed. So, all right, Sven, what's up, man? Sideways in red. All right, let me go. Okay. Yes. I talked about. So the question is, what is the chart with the kind of ghost pattern there in pink or red? That is if you take out all of the big drops. So if you take out Terra, Luna, Celsius, and FTX, which weren't really fundamental to Bitcoin, they were kind of, tangential to Bitcoin. That Bitcoin went down. Yeah, it was over leveraged. The whole market was deleveraging. Bitcoin did go down, but if you take out those big drops, it shows that Bitcoin was basically sideways for the whole year, and then it with this rally, it puts us very near the all-time high if you were to take out those big drops. So yeah, it's an extrapolation. It's kind of crazy, but I think it's interesting. All right, any other hands over here on Telegram? If not, I'll get back to writing the newsletter. That should be coming out here in about an hour, maybe a couple hours. I'm also going to be editing Friday's podcast and putting that out hopefully by the end of the day. So that should be coming. Make sure you guys subscribe to the podcast and give me a listen over there. One of the ways I am monetizing the podcast is by putting ads onto the RSS feed. So it helps me when people just listen over there and listen to the ads and stuff. All right, RB, bringing you in. What's up? Got to unmute yourself, and what's going on? I'm I am on Fountain. Just search for Bitcoin and markets. Should be on there. I've have a following of maybe like 20 guys that listen every single time and stream sats. So it's greatly appreciated over there on Fountain. I'll put a I'll find it and put a link in the Telegram for you. Yes, sir. All right. Well, I'm going to cut it there, guys. Thanks for joining me. Make sure you subscribe to the Telegram, or sorry, to the YouTube and to the Rumble. Trying to get Rumble subscriptions up so I can live stream there and continue to grow the audience. And that's going to do it, guys. I'll see you